Hi, I'm here with Alex Horn, Managing Partner of BridgeInvest. Alex, it's nice to be here with you today.
Thanks for joining us.
Alex, can you tell me a little bit about the milestones that you saw for BridgeInvest in 2025?
2025 was a very big year for us. The first thing I'll point out is that we crossed $1 billion in assets under management, which was a big milestone for us. It took us from being a niche asset manager to a true institutional platform. And on the coattails of that, we also launched our first evergreen discretionary vehicle, raising $250 million in that platform. Moving on to our geographic accomplishments, we pushed through to our West Coast expansion and now have 5 transactions that we've closed on the West Coast, including California, Nevada, and Arizona. Talking about kind of our originations for 2025, we're on track to do $890 million of volume, which will actually be a record-breaking year for us. And then moving now to the investor side of the business, we distributed close to $300 million of capital back to our investors, of which $44 million of that was actually profit.
Can you tell me a little bit about the evolution of the market that you saw and what you saw specifically in your portfolio?
And 2025 was a very interesting year. We saw that the market certainly picked up steam as the year went on, with the exception of the end of the second quarter, where we saw slowdown really due to the tariff conversation brought on by President Trump. But certainly in the second half of the year, we saw transaction volume pick up steam. In particular, we saw that a lot of sponsors were no longer just looking to refinance their legacy transactions and were really focused on new acquisition and development financing. There are a few main themes that we saw across asset classes, and I'll kind of talk about those very briefly here. First, on the multifamily side, multifamily, we saw yields compress over as the year went on, and multifamily still maintains the best leverage that you can get in the market today. Industrial, conversely, had a very different outcome. We actually saw the spreads for financing for industrial gap out. And this is really due to the supply overhang that we have in the industrial market today. We're still very much long-term believers in the industrial asset class. However, kind of spreads did widen as the year went on in that asset class. And then lastly, in office is really a tale of two cities. Class C and worse quality office really struggled to find financing in 2025, but Class A and even Class B office actually saw a renaissance of financing where a lot of those properties were able to get much cheaper financing and much better leverage than they were previously able to in the last few years. And I would go as far as saying that we saw spreads compress 150 to even 200 basis points on some office product this year.
Alex, can you tell me about some of the strategic priorities you have for BridgeInvest going into 2026?
Sure, be happy to talk about those. The first is our continued growth of Fund 5. We are planning to hold a second closing at the end of the first quarter. And we see this as a really interesting opportunity in the market as the market continues to scale and more buyers come back into the market to be able to amass more dry powder to be able to service those borrowers that need financing needs right now. We're also focused a lot on development lending for multifamily. There's an interesting opportunity now where supply from the last wave of development has kind of been absorbed, and be able to finance projects that come out of the ground now and will potentially be finished in 2 years when there will be a lack of new supply in the market. From a geographic standpoint, we're really focusing on 3 main initiatives. 1, continuing our push into the West Coast, as we have done in 2025. 2 is fortifying our position in the Southeast. We see great demand drivers here in the market, and as well as having really nice home court advantage of just understanding that market much better than most. And lastly, taking advantage of the political shifts in the New York market that have led to what we call really mispriced credit risk that we can take advantage of in that market. And last but not least, for 2026, we're focused on launching a new product that services our borrowers today and what we call our light transitional value add product. This is a product where we can offer borrowers a lower cost of capital starting at SOFR 275 for assets that are closer to stabilization on what is a 3-1-1 term, so ultimately a 5-year term for these products. So we're excited about that launch of that product in the beginning of the year.
Certainly a lot of vision for next year.
Yes.
What do you anticipate across the market in the year ahead?
So we're very excited about 2026. We see this market as one where we continue to see the increase of volume of transactions for commercial real estate in the year ahead. That really comes from buyers and lenders becoming more comfortable with the market as it sort of stabilizes. And on top of that, we also expect to see a lot more acquisition financing and development financing in the market, at least in our portfolio. We're categorizing 2026 as a year, as we call it, of selective optimism, taking advantage of all the opportunities we expect to see in the market, but doing so with still very thoughtful structuring around the deals that we do and a very clear lens on underwriting to make sure that we structure and we underwrite these deals appropriately. So it's a market where BridgeInvest has previously thrived on and we expect to thrive on in the year to come.
Well, Alex, it sounds like you have a really exciting 2026 ahead of you. Thanks for your insight and for your time today.
Thank you for joining us. I enjoyed that conversation.
Of course. Stay tuned for more from BridgeInvest.